Hello, hello, hello. What's going on, everybody? Welcome to Al Stock Trades. How's everybody doing today? Just wanted to go ahead and talk about a couple things. Uh, wasn't going to make a live today, but this is an emergency live. Vivek went ahead and said something interesting that I want to go ahead and dissect. I'm going to go ahead and just take a quick intermission right now to see if my microphone is working because I wasn't planning on making a live right now. So let me just go ahead and make sure this is good. Okay, good. So I see that you guys can hear me. We're all good. You guys can hear me. Yeah, I wasn't. So I'm like coding right now. I'm programming and coding. I wasn't planning on making a live right now, and I'm just kind of working on the code for my lifetime access members. But something really, something important was said today, and I feel like we need to talk about it. Uh, what was said was interesting. I'm going to go ahead and talk first. Let me just talk about it, right? Let me just show you, okay? So Vivek went ahead and posted, and I'm just going to read you a couple things. Vivek went ahead and said that the bubble we're in now feels like 1997 and 1998. Before this bubble bursts, there probably are another 1 to 2 melt ups over the next 12 to 14 months. Investment banks have yet to get in on the action. So I expect the banks to try and take a bunch of the AI companies public um, to basically get the appetite a lot, uh, filled. So essentially, a replay of 2021. It's totally okay to invest into a bubble. Just don't be stupid thinking it's not a bubble. And we have a lot of folks now, um, like Open Door. If you haven't realized, I'm noticing patterns with Open Door, SoFi, and whatnot. It's very clear that there's some yeah. There's a lot of um, discrepancies happening right now with this, and you really we really got to focus in on this because he says a couple things here. Many fortunes have been made selling before a top. More fortunes have been lost holding all the way down. A tiny set of the companies will be special ones. Let me explain to you what this means. Um, when the first .com crash happened, pets.com, because it had a URL, it went up to $1 billion valuation. It went up to something crazy. All those companies that don't have any revenue, that are not profitable, they're all gone. They're all dead. There's going to be a lot of bullshit AI companies that are going to be coming online now. And these companies are going to essentially inflate the market, and there's going to be a huge melt up. Okay. Huge melt up. And with that, is going to cause a whole lot of stocks to go up, and they're going to go up above intrinsic value. This post that Vivek said was today. This is fresh. Okay. The problem is once all these stocks go up, they will go above their intrinsic value and everything will explode. And people are going to have different attitudes. We're going to have people in the comment section. We're going to have hundreds of thousands of people watching. And it's going to get into this crazy melt up phase. Uh, the goal is how to position yourself to be successful. And I'm going to be showing you. So I have released, or I haven't released it yet, but I'm going to be releasing to my lifetime access members quant level style research that is impressive, that coincides with the overall timeline that this billionaire Vivek man is talking about. Okay. But let's continue finishing off what he said. Many fortunes have been made selling before a top. Now, I agree with this. Many fortunes have been made many fortunes have been lost holding all the way down. Now, this is a problem because like we can't time the market. Then he says a tiny set of companies will be special ones. Have your short list and have dry powder for when the valuations get super attractive. Talking about Palantir, et cetera, et cetera. Okay. So if you're a founder and were too young to remember 1997 through the aftermath into 2002, then ensure you have someone you trust around you that has a strong pattern recognition from that time period. The companies, this is going to be a replay of the past. We are going to get to a point where we are going to have a melt up. Okay. The timeline with my quant studies and my quant research, number one, the timeline of the rate cutting cycle. A rate cut happened in September, a rate cut will happen in October, and a rate cut will happen in December. And you will have rate cuts in 2026. You have the rate cutting cycle in the timeline of Vivek's, and you have my quant research. You have three itemizations that point to a high probability that we are going to engage in a melt up. Okay. So if you do remember 1997 to 2002 and are short list in this market, don't let your ego. So watch this. So if you do remember 1997 to 2002 and are short in this market, don't let your ego get the best of you. So he's pretty much basically telling you that yes, we're starting to have the beginning ingredients of a bubble. Investment banks have yet to IPO a bunch of stocks. We have yet to get into a melt up. He specifically states that we might have one or two more melt ups in the next 12 to 24 months. However, I challenged him and I argued and I said, well, I went ahead and wrote something here. I'm just going to go ahead and basically say it to you guys. If you look at Cisco back in 1998, 1999, the price to earnings was actually around, was it 20 something? Sorry, my apologies. It was around 55. The stock price was $15. NVIDIA right now, its price to earnings is actually 26. Cisco is compared to NVIDIA all the time. Cisco, when the dot-com bubble, before it bursts, Cisco actually got to a point where it had a price to earnings of 210x. I do believe we are about to get into a melt up. You have interest rates coming down. Money market funds have $7 trillion. It takes about, a couple $1 billion, let's say 100 to $200 billion to move the market $1 trillion. Not even. Look at how much billions of dollars with a $1 billion insider buy happened with Elon Musk. Okay. So get ready. So I'm going to show you. I wasn't going to show you this today, but given Vivek, I'm going to show you this timeline. Okay. So this is our small cap timing model. It is a quant level style research analysis. I'm going to go ahead and I'm going to load this up. And once we load it up, we are going to go from 1987 to 2025. Our AI models is going to have a prediction model by taking all of the data, by essentially taking large caps, the S&P 500, divided by small caps, which is the Russell 2000. So we're essentially taking large caps divided by small caps. By taking these two, you have a ratio. If the ratio is high, it means that large caps are winning. If the ratio is low, it means small caps are winning. As you can see, right after the dot-com bubble crash, small caps were winning for quite some time. But then after 2015-ish, 2012-ish, large caps took control. They dominated the spectrum, and they got to a point where we got to a point where we took it to the next level. Oh, uh, they pretty much dominated to where they outperformed small caps. However, a lot of people don't even look at this. They just look at large caps by themselves and small caps by themselves. But they don't divide the ratios of large caps to small caps and turn it into a ratio, right? And on top of it, they don't formulate an RSI on top of this. And they don't have an AI model that looks at different levels of the RSI to show you deep value versus standard value. And then they don't have the ability to go ahead and run 50,000 different Monte Carlo sequences to estimate when the next overbought condition, oversold condition is going to happen. Based off of this analysis, we've had 16 oversold events, and they occur every 2 to 3 years. The mean spacing is about 1.9 years plus or minus 1.4 years. The next oversold region has an approximately 53% probability of odds of happening on August 2026. Here are the odds from today's conditional analysis. You can see that 3 months from now, we have a 17% chance of small caps pretty much getting into an way outperforming in a level of where the ratio will be oversold. But if you can go ahead and see, in 24 months, we have an 78% chance, literally 80% chance, 8 times out of 10 Doctor Strange projections of reality, that small caps will get into a position where they will be outperforming large caps. Now, here is the hazard graph along with other data. You can see, you can essentially zoom. We will have again. I'm still working on this, but you'll be able to have the probability of essentially panning left and right and zooming in on this and getting deeper. As you can see, if you look at this red line here, this here, and maybe we can just kind of zoom in on here. This red line here, if we can just kind of go pan to the left. This red line here, it needs to touch it, okay? Because if you go ahead and take a look at the standard scale, if we run the analysis again and look at the standard scale, usually you will certainly always have the price always get in touch the 200-day simple moving average. It always happens. However, we are in an area where we are due for some form of oversold correction to where small caps will outperform. However, as you can see here, this was the dot-com bubble. And as you can see here, we're approaching levels to where we are getting near this potential dot-com bubble. And if we were to go ahead and do this analysis, I will soon convert this code into an overbought simulation analysis. And what this does in our quant level research, which will be available to lifetime access members, is the prediction models will be allowed to also go to potential predictions of what to expect from an overbought condition. So right now we're trying to basically predict when things could potentially go to oversold. And here is the data of when things can, where things have been oversold. In 1992, we had oversold conditions, and you can see deep oversold. 1993, 1994, 2002, 2003, 2006. The last one, if you guys remember, 2021. If you don't remember, 2021 was this year where essentially small caps outperformed before they were exhausted by large caps. So the goal of what we're essentially going to be doing is we're going to do a conversion factor where, just like how we predict models from a oversold condition, we will go ahead and predict ones from an overbought condition, so we can find a pattern to say what is the next probability that we might have another potential sell-off based off of the evaluation models, by looking at all of the large cap companies and all of the small cap companies. Large caps, the S&P constitutes 500 companies. IWM has 2,000 companies. So within this analysis, we are analyzing over 2,500 companies in one technical analysis spreadsheet. And by doing this, we have our AI models, which I'm going to be showing you later, that are going to be running through all of this. As you can see, this level of research that is going to be available for our lifetime access members is multi-million-dollar level research, probably in the billions. And this level of statistical analysis, unfortunately, retail investors have not had access to, and we are building it. We are building it, and I'm very excited for it. But what I'm basically seeing, the reason why I wanted to do this emergency live, is that we have Vivek now saying 12 to 24 months we're going to have potential melt up. He's also said, don't be short the market, don't be stupid, check your egos. So this is almost like a pre-warning saying, get ready, because look at it. It doesn't take a smart person to figure this out. Look at Open Door. It has been soaring. Look at SoFi. It has been soaring. Look at small caps. Let's go ahead and open up IWM. Small caps are literally near their, they've approached all-time highs. Look at small caps. They've approached all-time highs. Everyone was telling you small caps this, small caps that. They've approached all-time highs. I would like you to look at SoFi. SoFi stock is now $29. It's about to almost hit 30. Remember when we talked about it at $4.64 or whatever it was? You can look at our previous videos. So you're starting to realize now, based off of the data I'm showing you, and you can see it's a very clean, simple way of showing you the data from our quant research. It is simple, stupid, but there's a lot of back-end calculations happening, and it's given to you in an Apple-like, easy-to-read and understandable format. And this is what I promise to my lifetime access members. I promise you that, you can see I'm working 24/7 on this, right? I've been working on this for quite some time, and I was like, you know what? Let me just go ahead and push this to the next level, and let me just go ahead and roll this out. So I worked on it a lot, and there are other quant things that we're going to be having, but we are. I want you to just. I need you to just think about this for a sec. Okay, open evidence is worth 3.7 or 3.5 billion dollars, and they only make $50 million in revenue. And they're private. They're not even public. Clover is a public company. We already know they have a SaaS company. We already know that. We already know they've announced partnerships. We know that there's a potential link to Humana. I'm going to ask you, just from your brain that God has given you, what do you think is going to happen when they release SaaS numbers and revenue? What do you think is going to happen to the stock price? What do you think is going to happen? Listen, life comes at you pretty fast. For me to build this quant research fast, for me to build this, I'm a fundamental investor. For me to build this, ask yourself why. Why am I building this? Why am I doing this now? I am busy as hell. Why am I doing this now? Because this has the potential of rising very quickly. Very quickly. This is not an energy transfer stock. This is not a value stock. This is a growth stock. I would like to just one of our lifetime access members pointed this out. Look at app 11. It used to be app 11 here. Used to be $9. It used to be a lot lower. Now it's $649. It is a 65 bagger. Understand? You understand me? This happened within 3 years, less than 3 years. Life moves at you very fast. Okay? It moves very fast. For the folks that don't pay attention, it is what it is. As of right now, I am engaging my data. I'm also going to be engaging the wheel strategy, and I'm going to make sure I have a plan of action. Things can move very fast. Remember, all they need to do is release SaaS revenue. Once this happens, the story completely changes. Everything is rewritten. Chamath, now people look at him, completely different picture. He surrounded himself with Trump, President Trump. It's a whole completely different ballpark now, guys. For all the people out there that want access to our quant level research and everything that we have to offer and all the future innovations that will essentially, you get our lifetime access, you'll get any upgrade we give you, right? You know, take advantage of SaaS coupon code. That's all I have to say. God bless you, and I'll see you on the next one. I'm going to go back to coding the future and making sure my lifetime access members have the best technology in the world.